Large consolidation leads to large expansion. And that is exactly what we're seeing on both the higher timeframes and smaller timeframes for Bitcoin. Bitcoin on the 2-day chart is currently sitting just above the 50 EMA and Gaussian channel upper band, while on the smaller time frame it is steadily consolidating under a major uptrending support in a horizontal structure. In today's video, we're going to be analyzing both the higher time frame and smaller time frame and discuss the soon-to-be explosive move coming for Bitcoin. Let's get into the video. Okay guys, welcome back to the channel. Thank you so much for tuning in. I hope you're all having a fantastic day today. We're here to take a look at Bitcoin on the macro charts and the smaller time frame as Bitcoin is undergoing a period of strong consolidation. And as you would know, after strong consolidation, we do generally see strong expansion, meaning we do generally get a directional move. And we do expect this directional move to be a volatile move and one that will catch the majority of people off guard. In today's video, we're going to be discussing the macro and smaller time frame charts from both a technical and structural level, preparing you for this move, and of course, explaining what we can expect next for Bitcoin price action. Before you get into it, smash the like button, hit the comment button, and subscribe to the channel, guys. We do daily videos focusing on Bitcoin, discussing the facts, the data, the objective realities, the technical and structural information, and of course, the news events, leaving out emotion, leaving out bias, leaving out BS, focusing purely on the raw data and raw TA. If that is the kind of content you're interested in, you are in the right place. You can also find us on Telegram, the second link down below. You'll get access to charts, updates, analysis, information, videos, educational posts, news events, and so much more, guys. Everything you need to understand the markets when it comes to Bitcoin is in this channel. If you are interested in trading signals, join our VIP. We have over 560 members. We post trading signals with exact entries, exact targets, exact stop losses, and with exclusive analyses. Not only do we do that for altcoins and Bitcoin, we also have a group chat. Our group chat has 4 separate sub chats. We have a general chat, trading charts, education chat, a help chat, and of course a altcoin analysis chat where you guys can suggest altcoins, in which I do full, complete short-term and macro analysis for. If you're interested in joining the VIP and joining over 500 members in that channel, you can go ahead and get access by that pinned comment in the free channel. Scroll up to the top and contact me. Again, more information can be found and our entire trading track record can be found since February 2021. Let's go ahead, guys, and get into the video, starting off with the market data. And look at this. $31 billion, 24-hour volume, down 34.57%. And this is probably the slowest I've seen the market for like 2 months. But as I said already, a slow market isn't a bad market. Just because we're seeing pretty much no volatility, just because we're seeing compression, it doesn't mean it's time to not pay attention. If you're watching this video, and a lot of people probably aren't watching this video today because the market is slow, but if you are watching this video, pat yourself on the back because you're here ahead of everyone else, preparing, planning, and executing before the majority. And guys, guess what? The same thing happened at the bottom. The same thing happened back in November, December when volatility was dying off and people weren't paying attention. In hindsight, that was the time to pay attention. It's the same thing now. When the majority are not watching, that is when the big moves are starting to develop on the chart. And we're seeing signs of that already, and we're going to discuss it today. So, 24-hour volume is down 34.57%. 24-hour liquidations do follow. We're down 21.25%. We're down to 25 million. So the market is by all means absolutely dead. We're seeing 7.02% down for the current month of May. Of course, we have about 9 days left of the month, so we are most likely going to be closing out this month red, and we'll be discussing the implications of a red month or a red candle close on monthly in regards to the macro trend as well today. We're discussing what that means, how it can influence the future price action, and what it means for the macro price action in terms of the 4-year cycle. Moving on, the volatility index, of course, as expected, has fallen off a cliff, right? The 30-day volatility index is now officially under 2%. We're sitting at 1.65%. The last time we were at 1.65% was all the way back in January. This was before this entire move toward the upside, before we even seen this entire expansion phase over here. We're technically at volatility period. The volatility strength, the strength of volatility, or the index of volatility, is sitting at pre-$21,000 levels. We'll discuss the implications of that in a minute and talk about how that can actually lead to certain moves. We'll discuss that later in today's video. Looking at the 60-day volatility index, we can see on the 60-day, we have dropped down a decent amount as well. You can see already on the chart before I zoom in, we are basically falling off a cliff over here. We are down to 1.98%. Again, that is bringing us back to around late January, early February levels. Again, the volatility is falling off. Now, volatility as a whole doesn't determine price action, but volatility as a whole is a representation of a specific metric of price action that is, I guess, in correlation with liquidity, volume, and momentum. Volatility is one of the three main components of momentum. As we know, momentum is directly linked to the price action strength, or the strength of a trend. So when we start to see momentum fall off, we can assume that volatility is dropping, and thus if volatility is dropping, we can assume momentum is falling off. And if momentum is falling off, we know the strength of a price action is decreasing / the strength of the trend is falling, and that can give us a statistical advantage towards a downside move as opposed to a move upwards, as a move upwards would require volatility to start rising. Now, I don't necessarily take the 30 and 60-day index to heart too much, but it is a good sign to look at for macro moves. So short-term moves, and in moves such as what we'll be discussing in today's video, not entirely relevant, but if we start to see volatility fall and fall and fall even more in the macro, that could have extended consequences to the health of the macro chart, and of course push the prices down, or be a added metric of price action which we'll be looking at to justify moves for the downside. So it's not the be all and end all, but it's definitely not a very good sign to see. Moving on from there, liquidations of course have dropped down a fair bit. We have seen liquidations drop to 25 million in the last 24 hours. Still shorts and longs getting liquidated a bit. Again, we're not really seeing too much. We're seeing a little bit more on the short side than the long side, but 25 million liquidations is by no means very high. So again, not too much we're looking at on the charts over here. The DXY, of course, the market is closed right now, but we did see a very strong week on the DXY, right? In the last week, we saw a break over this downtrending resistance. We're pushed up to retest 103.5. Again, we have broken up over the 50 EMA, and the small time frame moving averages are about to converge upwards. We could definitely see the strength develop for the DXY here, continuing toward the upside. We are developing a small uptrending support level right over here, so we are likely to potentially come back and retest this support level before a continuation upwards. But overall, we have officially broken the downtrend. We are creating an uptrend. I wouldn't expect the DXY to flip bearish again unless this horizontal support is lost. If the horizontal support's lost, expect lower. Until then, don't be surprised if we start pushing higher, clearing out some of these levels over here. The next target will be around 105. Moving to S&P 500, we did say S&P 500 has broken over a major resistance, but we do want to see at least a daily candle close, if not a weekly candle close above this resistance level. Unfortunately, have yet to see that. We actually close a daily underneath it, within it, but again, doesn't matter. Below it is below it, within it is within it. If we're not above it, we're not above it. So technically it is still providing resistance. It'll be very interesting to see what this current week brings to the markets. If we do get that weekly close above this resistance, we actually could see the S&P 500 take a push upwards to 4,300. But of course, the DXY does continue strong upwards. It's more likely we come down to retest 4,150 toward that POC level. Again, the higher time frame structure is a bearish structure. This is a rising channel formation. Thus, if we do retest this uptrending support level and we do lose that uptrending support level, expect the prices to come down. Until then, we are in an uptrend, so therefore expect that the price should steadily rise until two things occur. One, we get rejected from these liquidity zones, or two, we break below our uptrending support. Exactly the same goes for the Dow Jones over here. The uptrending support is represented by the dotted trend line this time. However, if we do break the uptrending dotted line, expect a move downwards. If we break through this resistance level, expect a move upwards. Let's go ahead, guys, and get into Bitcoin's price action. We'll go ahead and jump in now. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 US in trading rewards, up to 15% discount on your trading fees and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. Okay guys, so there's two primary things I want to discuss today on Bitcoin's chart, and that is the 2-day chart 50 EMA retest and Gaussian channel retest, as you can see in the chart over here. And of course, the consolidation we're seeing not only on the 2-day chart as represented by the smaller bodied candles, the smaller wicks, and of course, tighter range open to range close prices, but of course, the smaller time frame consolidation and compression we are seeing on the hourly chart represented by this horizontal channel. As you can see, we have a horizontal channel over here. We have range lows, we have range highs, and of course, we have even got tight compression sections within the midline of this channel, representing again a neutral consolidation, which could potentially lead to a directional move. And more often than not, guys, when we see consolidation, we will see compression at these important levels on the chart, and this is a very important level. Not only are we at the 50 EMA on the daily, not only are we at, again, the Gaussian channel on the 2-day over here, but if we go out to the weekly chart, you can see we're sitting right above the 50 EMA, we're sitting right above the 200 moving average, we're sitting right above the bull market support band, and we're sitting right above the Gaussian channel midline, as you can see over here. So we are actually consolidating above a multitude of significant levels on a technical and structural point. And generally, when we see consolidation at these levels, it is indicative that we are going to see an explosive or directional move from this level, a move of significance and importance of a macro trend and a short-term trend, not something you want to miss out on. So before we talk about the next move, before we talk about what's going to happen next, we need to apply some degree of context, so even when we discuss the next move, you understand what it means. So let's talk about the overall trend on the daily chart. First and foremost, from a structural level, we're talking about the macro chart from a structural level. Then we'll get into the technicals on the 2-day, talk about the consolidation, then we'll get into a small time frame. So currently what we have seen, guys, is of course we've seen a overall uptrend. We have been in an uptrend for Bitcoin ever since we broke the Gaussian channel right over here on the 12th of January 2023. In fact, if I go back to the start of the video, if you remember, volatility hasn't been this low currently. The last time it was the 12th of January, so that's quite a coincidence right there, right? But we broke out of the uptrend right over here. On the 12th of January, we broke the Gaussian channel, we broke the downtrending resistance of our falling wedge, and we also pushed past the 50 EMA a few days prior. So we had 4 points of consolidation, 4 points of confirmation of a trend reversal. That trend reversal resulted in a move all the way to 30,000 where we had deviation. And since then, we have broken the daily uptrend, right? We lost the 50 EMA, we lost the upper band of the Gaussian channel, and we have lost the mid band of the Gaussian channel. Along the way, we have now consolidated above the lower band of the Gaussian channel. And of course, we are pinching between the lower band and the 50 EMA. So let's see, the 50 EMA is pushing over here, the lower band is pushing up, and between that, we have our range low support, which of course is 27,000 to 26,800. So we are seeing compression and consolidation on the daily chart. We're seeing that on the weekly chart. We're seeing that on a smaller time frame. But the question is, where is it going to lead to, and what bias should we have currently for the price action at the moment? What is most probable? So if we look at the high time frame trend and we kind of analyze what is going on, assign our directional biases to the trend, we're going to go ahead and look at the right hand side of the screen. So as we can see, anything above 32,000 is macro bullish. In fact, a monthly candle close above 30,000 is going to be macro bullish. And as you can see, we go from bullish to macro bullish. The higher we go from 30,000, the more bullish it does get. But a monthly candle close will put us into the macro bullish trend. Reviewing the 4-year cycle, you can see every single time we do close a monthly candle close above our prior bull market low, which is represented by those horizontal red lines, we actually push up to our dotted trend line. We saw it here. We saw it here, push up to the dotted trend line. If we close a monthly candle above this red line, which is 30,000, we're likely to do the same thing and push up to 48,000. However, until then, we are not really in a macro uptrend, we're just in a uptrend on the daily, on the weekly. So the weekly uptrend, let's take a look. The weekly uptrend is still intact. If we go back to our chart over here, we can see that the price is above the 200 moving average. Perfect. The momentum is positive, meaning it's above the 0 point on the histogram. So we have positive momentum. This is negative momentum. We have positive momentum, but we are seeing a glimmer of weakness. And this glimmer of weakness is a consequence of the current compression we are seeing on the smaller time frame. We'll discuss that in just a moment. So we're seeing a glimmer of weakness. However, we are in an uptrend. We're above the 50 EMA, we're above the 200-day moving average, we're above the bull market support band, and we're above the Gaussian channel midline. So we are on a weekly uptrend, but the weekly uptrend is on the verge of a collapse. It is on a brink, it is on the edge of a cliff, whatever you want to say. The weekly uptrend is about to be lost. If the price does drop any lower, the weekly uptrend will be lost, and that can have extended consequences to the monthly chart, because we do close a monthly candle red here, and it does engulf that prior monthly candle. That could actually push the price down into a reversal, which can take us down to that 24.4 to 25.2k level, potentially even lower if it so pleases. We'll discuss it if it does happen. So what we're seeing now is strong compression, and we're seeing strong compression at a significant level. So now you know the importance of these levels. We can talk a little bit more in detail about what's happening. So let's go back to this chart over here. If we do see a loss of the 50 EMA on the 2-day, if we do see a loss of the Gaussian channel upper band on the 2-day chart, we are going to be entering a bearish trend on the weekly, okay? If we push below the 50 EMA and the Gaussian channel upper band, that as a consequence will push us underneath the 200 moving average on the weekly, and thus we'll be in a weak bearish trend. The weekly bullish trend will be lost, and we'll be entering a weak bearish trend that will most likely take us to 24.4 to 25.2. Until that happens, we are in a weekly uptrend. So if we are in a weekly uptrend and at the verge of a decision point, a flipping point, a trigger point, that tells us we are at a major potential support. And that is correct. We are at a weekly support. We have a massive potential trampoline point here for Bitcoin, a potential bounce point. And we'll discuss that in a moment. However, if we do lose this level, we can expect a strong pullback to 25.2 to 24.4. If that level is lost, of course, we do enter a higher time frame bearish trend. And of course, if we do enter this range, we are at risk of actually creating a macro downtrend. So moving back to this chart, guys, if we delete everything off the chart, we can see the weekly trend is still very much upright. We have an uptrend, we have a 2-day uptrend, we have a weekly uptrend. The day trend has been lost, but we are losing that strength. We're bouncing the 50, we're bouncing the upper band. If those levels are lost, we are going to see a move downwards. So what will trigger these points of significant support to be lost? And remember, if these points are lost, we will see a break of these points on the weekly, and those points on the weekly are lost, we have a potential to enter a bearish trend / lose that weekly uptrend that has pushed the price upwards over the last few weeks. So what could do it? We have to look at the short term. And here is the short term price action, guys. Let's take a look. So high time frame zones for short term. Bullish above 30,000, pretty standard. From POC 28,000 to 29,800, we are in a neutral territory. Underneath 28,000, we are in a short-term bearish trend. Underneath 25.8 to 26,000, we are in a strong bearish trend. The reason why this will be a short-term strong bearish trend is because below this level, we would have lost the 50 EMA on the 2-day, we would have lost the upper band of the Gaussian channel, and we would have lost the 200 moving average on the weekly. So don't look at this red box and think, oh, it's just a support level. Think of that as the upper band of the Gaussian channel, the 50 EMA on the 2-day, and the 200 moving average on the weekly. That is what you should be thinking of that as. So that level is lost, we are losing these levels, and what does that mean? Well, it means the price has gained a lot of bearish strength on the weekly chart, and that could push the price lower on the smaller time frame. Or, as again, they work in conjunction. It would be pushed lower on a smaller time frame due to the loss of this level, due to the push into this lower liquidity zone, which as a consequence would break these levels, as a consequence would then reflect on the higher time frame charts as price weakness. So it's all kind of like in conjunction with each other. It's not really a cause and effect thing. It all happens at the same time. So How can we determine what will happen next, and how can we determine if the price is going to move downwards? This is when we're going to use a short-term price action. Now, the short-term price action is incredibly important right now. We're in a strong horizontal compression zone, and this compression zone has lasted over the last 7 or so days, and this is why the price action is getting quite boring now. We've been in this compression for about 8 to 9 days now, and a lot of people are getting bored. Particularly in the last 48 hours, we have seen a 48-hour period of almost no price action, whatever. This is 0.5% range for 48 hours. Absolutely insane how strong this price action is compressed. But as we said in our Telegram yesterday, if we get an hourly close above or below these trigger points, we're going to see a continuation. In that fact, we saw an hourly close above, we saw a continuation upwards. We do expect the price action to continue upwards to its range high before it gets potentially rejected or it does push downwards. Now, how can we determine the next move for Bitcoin? How can we use this price action here to determine what's going to happen on the higher time frame? And how can we use this price action here to tell us the probabilities of a higher time frame continuation downwards or upwards? And this is where it becomes very important. If we look at this high time frame zone, we can identify we have our range low here. We have obviously a tempted range low over here. We have our range high here, and we have the midline in our channel. Now, we know that our highs and lows are areas of liquidity, and we know that our midline or our middle level is an area of compression and consolidation. Therefore, when we see the price break through these compression and consolidation levels, these act as bullish and bearish triggers. This is a bearish trigger. This is a bullish trigger. When the price breaks above, we're likely to continue upwards until we find liquidity at that liquidity zone, which what we have seen before has acted as a resistance between 27,400 and 27,500. And thus, we expect the short-term price to continue to this range before it even makes a directional break upwards or of course rejects toward the downside. Here is the thing, guys. The key points on this chart is going to be the range high at 27,500 and the range low at 27,300. A loss of 26,300, will push the price into the strong support here, which of course is 26 to 25.8. And again, it's not really 26 to 25.8. It's a 200 moving average on the weekly. It's the 50 EMA on the 2-day chart, and it is the daily Gaussian channel lower band on the daily chart. All points of major confluence. If we push into this level, we are therefore retesting these major points here. We are retesting these major points here. We are retesting these major points here on the daily chart, guys, too. And I'll bring the daily chart up. You can see on the daily chart, we're retesting the lower band of the Gaussian channel right over here. That's sitting at 26,500. If we push into that level, we are losing / retesting some of those absolutely crucial points that are holding the weekly trend up, holding the weekly trend where it is. So if that level is lost, we can expect that continuation downwards into that 25.2 to 24.4K level on the price action chart. If, however, the price is able to break above this range high, we have a potential to push back above this uptrend on a smaller time frame, guys. Uptrend on a smaller time frame being the local resistance, which is keeping Bitcoin in a bearish downtrend. If that level is broken, we have potential to flip back into that neutral trend, which could facilitate a rejection / breakout of this downtrend resistance, which could potentially facilitate a move higher and up into this bullish range. And therefore, that is why I'm saying the price action right now, where we are currently at on the charts, is incredibly important. You have to be paying attention, because if you want to catch the next macro swing, whether it be a swing trade to 30,000 and beyond, whether it be a swing trade to 24.4 and lower, this pattern, what we're seeing right now, is going to be absolutely detrimental in determining that direction, guys. And a lot of people are going to miss out because a lot of people aren't paying attention because the price action is boring. Do not let your emotions, and yes, boredom is an emotion, do not let your emotions dictate your actions. Do not let them influence what you do, what you think, and how you'll see the price action. Look at it for what it is. If there's not much going on, there's always something going on. Look for what could potentially be going on. Plan ahead. Thanks for watching, guys. I hope you enjoyed, and I'll see you guys in tomorrow's video. Cheers.